Hello and welcome to another series of a popular webinar InvestNest, Spotlight on Businesses amid digital boom and commodity supercycle. My name is Santa and I'm your moderator for today's event. On behalf of Kalkinemedia, I'm pleased to welcome our esteemed speakers from the leadership team of the top ASX listed players, Altan, and not to forget our refined.
I suppose a good place to start for your audience is what's happening with the actual commodity cycle in gold. We're a 100% gold focused company, and our interests are specific to Western Australia, where we see a huge potential for growth over the coming period. I just wanted to set the tone correctly. On the left, we've got a 5-year gold price in US dollars, and you can see that it's been a pretty good period. Specifically over the last couple of years for gold as a commodity. People do seem to get very short term with their view on gold and where it sits in relation to cryptocurrency and other sort of monetary policies. I think our fundamental view is that the gold price is going to continue to move upwards over the coming period, and I think that's sort of, even in the last 30 days, we've seen a real resurgence in that positivity for gold. Over the last couple of years, we've seen many debates about the relationship with gold and the presentation and the Marble Lock mine to the right, which we'll talk a little bit more about for our existing arrangement with them. But you can see these are very substantial mines, very, very well established, and that's the purpose of this company, is to go out there and discover the next million-ounce deposit. So the best place to go looking for mines, and I'll sort of walk through this, is of course next to already existing discoveries. If somebody has already historically mined or produced a very large amount of gold from an area, the question is what is in line with that? Why did that gold deposit occur there, and how can we take advantage of that? And most of the discoveries that have been happening lately have been, we call it, exploring in the shadow of the head frame, which has been very, very. There's been a lot of new gold discovered in Western Australia in very close proximity to existing mines, and that's a function of technology, being able to drill deeper, being able to mine deeper. A lot of mines that were discovered in the 80s and 90s, when the gold price was $300 an ounce, they went down to a certain depth and then became uneconomic. And of course, with the Australian dollar gold price now, north of $2,000, and it's been as high as $2,500. A lot of those mines can be reopened. Not all of them, but a lot of them are economic. And what we've got here on the screen is a series of mines that either have produced or are currently producing more than a million ounces of gold. So very, very substantial gold deposits, and in very close proximity to the land hold we've got. These are the Copperhead and Yilgarn Star mines, very, very profitable mines at north of a million ounces produced. Similarly, around the town of Southern Cross, and these are sort of aerial photos, perhaps not giving the true picture, because both of these mines were substantial underground opportunities going down sort of 200, 300, 400 metres up to 600 or 700 metres below the open pits, and they were able to do that because of the high grade profile. So these are mines that these two mines averaged between 5 and 6 grams a tonne produced, and if you compare that to a lot of the production in Western Australia today, where the average grade being produced at the moment is somewhere between 1 and 2 grams, and it's closer to 1 to 2. So these are plus 5 gram, very, very profitable gold mines. And the reason for bringing this up is to show you the proximity of our land holding. So on the map on the right here, our holding is represented in red, and what I've shown there is the other major landholder is a Chinese-owned company called Bartow Gold Mines. It was originally called Minjar Gold, and in 2017, Minjar Gold paid $330 million for what's represented there in grey. Now, you may notice that both the land holding purchased for 330 million and our land holding represented in red is very long and skinny. We represent about 30 to 35 kilometres of strike, and not a dissimilar amount for the Bartow gold mines. The reason for the tenement packages and the acreage that we own being so skinny and not going over a much wider area is all of the known gold mines occur geologically on the contact between the ultramafic greenstone rocks represented in green and the eastern granite dome represented in pink. So the long and short of it is that geologically, to find and develop gold mines in Southern Cross, you really have to be on that contact, which is around 60 kilometres long. And as you can see, it's quite a unique situation to have a company like ours that actually has that sort of exposure. And there's not a lot of room for anyone else to get in on this belt. So we feel quite content with our land holding. We have been slowly adding to it as the opportunity comes up. But the reality of it is we've now secured such a good portion of the high conviction ground that really what our job now is to go and drill them up and develop the projects as they come along. So the first thing that we've done is to go and look at on our tenure, we have a mine that was mined in the 60s as an underground operation, and it was mined for a short period in between 1992 and 94, when the gold price was around that $300, $350 an ounce. And then at that stage, gold mining was a tough game. The people that owned it made some money out of it and moved on to another deposit, which was a common thing to do at that point. And really, what we saw in this as our sort of high priority target was the fact that it had never been drilled at depth and it hadn't been expanded laterally. So really, we felt like it had not been properly evaluated. One of the technological advancements that has come along is the opportunity to use electromagnetics to search for gold targets. And although electromagnetics or EM has been used extensively and very successfully to discover nickel deposits, its use for gold exploration is less common. And one of the reasons for that is it doesn't work on all the gold deposits. It's very specific to having the presence of certain sulfides and a certain mix of high-grade gold. And one of the things that we discovered earlier this year was that there's a very high correlation between pyrrhotite sulfides and the high-grade gold occurrences at this deposit. So we conducted a series of EM surveys, down-hole EM, and what it lit up, which was a real win for us, is what's represented in the grey shaded area underneath the historic open pit. And what it's shown us is that there is a very, very large conductor sitting below the known mineralisation, and that's very exciting because that could lead to this deposit developing, to become something substantially bigger than it currently is. The reason this target sits at the top of our list, as opposed to, I think we have defined around 23 different targets, is we already know that mineralisation exists here because it has been mined. We've got all the records from the 60s and the 90s. We're able to do drill planning based upon that known mineralisation. And you can see that we're progressively over the course of this year with our drilling represented in the different coloured dots there, expanding the known pit with a view that we will be able to open this up as a new open pit. It sits on the existing mining licence, so there's some real advantages there with the speed to production. And we're looking forward to testing that EM conductor sort of late June, July, That's deep diamond drilling. It's exciting stuff, and we're really looking forward to getting stuck into that. This is just representing the same thing slightly differently, and understanding that the audience may not sort of be geologically technical, but you can see the planned hole that we're putting in there substantially deeper below the known open pit. But going back to those previous examples of mines, you know, just up the road from here, around sort of 10 to 12 kilometres, we have the Copperhead mine. I presume everyone can still hear me okay. So moving on, as I said, we control around 30 to 35 kilometres of strike. And Pilot, albeit a very, very good target and something we're excited about, is certainly not the only opportunity that we're looking to develop. And we're doing all of these in parallel because, you know, our view on that commodity cycle is that it is a time to be in gold, but more importantly, it's a time to be in gold production. And we really need to deliver, you know, substantial results to our shareholders. So here we have a area that we're planning on drilling next week. We'll have two fairly substantial 400 metre deep diamond holes going into this area that, in this case, the opportunity is that they all have the characteristics of being strategically very much alike known mines on the strip. So we use a combination of geophysics and geochemistry to outline these targets. And the reason they've been prioritised is they all have had high-grade gold intersected by drilling and not followed up. So it's really a case of ranking them. You know, my personal favourite is number 5, which is the Paddocks target. We come from a farming background, and I guess the idea that you've grown a wheat crop over what, you know, is likely to be, well, there is gold there. We know that there's gold under Paddocks, and that's a very exciting proposition, but it's a very early stage proposition. So the challenge for Paddocks specifically was that was drilled back in the late 80s, early 90s. There was then an ownership change, and there was a reason why it wasn't followed up. But unfortunately, because it is under a paddock, you know, within a year, the local farmer had ploughed and cultivated the area, so no one knows where those holes are. So we have a fairly unique challenge in that we do know that there's gold there. We do know that it's substantial. It's a very hot target on magnetics. We're very keen to get the electromagnetics out there. So the electromagnetics is a new technology for gold exploration, and we want to get out there and use electromagnetics to try and highlight where it is. But the truth of it is that those drill holes were ploughed into the ground immediately after they were drilled. So that's a bit of a missing treasure hunt. So they all have different priorities, and they all have logically different timelines to production. Pilot is a licensed mine, so that is easily target number 1 because of the fast path to production. Paddocks is logically probably the longest pathway to production because we don't even know where the holes are. We just, you know, we know broadly a 2 or 3 kilometre area that they're in. And but as far as intrigue goes, I love the idea of hunting for the treasure in Paddocks.
Great. We have a really interesting question from Sandra. So Sandra is asking, how is Altan differently positioned among other mineral exploration and development companies to create shareholder value?
I think there's two simple, I'll try not to talk too long. The two simple answers are, number 1, we know that we're on known gold producing structure. So it's not a case of following up on magnetics or geophysics or geochemistry that may host a gold deposit. We know that we're on the known structure. And so I guess that sets us apart in some ways. I guess the short form answer is our relationship with the local mills and the fact that we've got two very large processing facilities. So if we went out and found a relatively small ore body, like a lot of juniors do, the question then becomes, have you found enough gold to justify building a plant? And if the cost of that plant is 50 or 100 or 200 million dollars, then you need to find a minimum size ore body to justify developing it. Whereas if you already have the plant in place, a relatively small discovery can be commercialised, and that's a key differentiator for us. We of course are not looking for small deposits; we're looking for large deposits. Calculation on a very small resource. So if you said you had 50,000 ounces, and you can easily multiply that by the current Australian gold price of about $2,300 an ounce, and do some rough mathematics on that, and you come up with a very substantial revenue stream. And again, it comes down to that key advantage of being able to mill that. So I think, as I said, our goal is to create initial resource this year, and then on an annual basis grow our ounces per shareholder. So a very important thing to us as a company is not to attract shareholders that are just there for the quick uplift. Of course, that's all about timing, and that works. But if year on year we're increasing the number of ounces attributable to each shareholder, then we're going to create a great growth engine for a long time to come. And Southern Cross is the type of area that you can do that in, because you're not just talking about chasing one singular deposit to develop. Hopefully what's come across here is we see ourselves being a multi-mine developer, and having that opportunity where shareholders don't just get one uplift, they get a consistent growth over a number of years.
Thank you so much again, Paul, for joining us, and I'd like to extend our gratitude towards our audience for attending the webinar. We hope you found that session informative, and for delivering any further inquiry into the market updates, audiences, please do visit our site, and speakers stay abreast with the market moves, stock markets and economic transitions with Kalkine Media. We have live shows daily, and you can also visit our research website, kalkine.com. So our next Invest Nest webinar series will be soon. We try to hold them every month, and stay tuned for more information on that. You can connect with us on our socials via Facebook, Twitter, Instagram and YouTube. And yes, please email us on info@kalkinemedia.com. We do love hearing from you. And with that, thank you. Invest wise and stay apprised with Kalkine. Thank you for joining us. Goodbye.